Lucy and I have been working with a couple over the last year or so who are business owners. They're in their sort of mid to late 30s. They're looking to get something in place to save and invest for the future. They don't have the usual benefits, workplace pension, etc. So really they want to make sure that they're looking after themselves later in life. After an initial call with myself where we talked through their immediate priorities, it became clear that pensions was something they were very focused on, getting something set up and saving regularly into that. I explained on the call that we're a holistic wealth management firm, that we've got the wealth planning side and the investment management side, and we bring those together for our clients. And as much as I could help them with the pension contributions and setting it all up, we would need someone to help manage the investments within that on an ongoing basis. So that's when I introduced my colleague Lucy.
Following on from the conversations that Will had had with the clients, I then had a lot of information that I could work off, knowing exactly what the clients wanted to get from their portfolio with Killik and also any future objectives that they wanted to achieve. My further conversations with the clients was more particularly focusing on the risk profile. And here we are looking at how we could construct the portfolio and more specifically the asset allocation that we would use. As advisors, our roles are actually fundamentally very different. My role, I'm focusing more on the day-to-day management of the portfolio itself, looking at the risk element that we're taking on for the clients and making the most of opportunities within the market and building that around the recommendations put together by Will.
My role is more focused on the longer term objectives for the client, the structuring of the investments and the tax planning elements. So in this case, a lot of focus on pension legislation. This is designed to sort of utilize Lucy's engine of growth, but delivering the long-term financial goals of the clients in the most tax efficient manner for them. We're early into the client life cycle. So far, we've only been working with the clients for just over a year. But what we have managed to do is we've consolidated in existing pension arrangements they had. We've made some pretty substantial contributions from their businesses, even started investing into ISAs as well. We're trying to make sure that we utilize all the tax allowances that are available to the pair of them. And on top of that, we've even set up some JISAs for their kids.
So within their pensions, I've been taking on a strategy that's more focused on growth, and I've done this by particularly investing in equities because they can achieve better returns over the long term, which matches up quite nicely with their investment time horizon, considering it is a pension and they can't access it for a while. Whereas in the ISAs, we agreed to take a more balanced approach because we've had conversations with the clients where they've said that they might look to draw some of these funds at an earlier date.
On a day-to-day basis, Lucy's managing the portfolio, so she's got an ongoing review of the investments within the portfolio, making sure that if anything changes, she's adjusting it as and when she needs to. From my perspective, focusing more on the legislation side and watching out for things like the autumn statement, the budget, potential changes in pension legislation that may require us to adjust the plan, notifying the clients accordingly, and taking any action we need to off the back of that. On an annual basis, obviously we want to make sure that we're staying in touch with the client, so we want to meet with them at least annually. Actually, over the last year, we've met with them on several occasions, really focusing on their circumstances, their financial objectives, any changes that may be coming up that we need to factor in to the plan, and if there are, then taking the relevant steps for that.
I think that one of the benefits for the clients having both of us is that it can provide them with better peace of mind, knowing that they have two specialists in different areas that they can go to if they have any questions.
For me, a big advantage to working in a team with Lucy is that we're able to provide a wider range of solutions to our clients. So what started as an initial query about pensions quickly evolved into holistic wealth management.